Hello and welcome to another update video about ADA. On the ADA chart, we still wait for clarity because we haven't taken out the yellow wave 1 high. If we break and sustain above this level, which is at 30.4 cents, then the yellow count can be followed with more clarity and more confidence. And until then, the white wave count is still reasonably likely and still very likely actually, because ADA hasn't really given me what I would consider a reliable 5-wave move to the upside, even though we could be discussing the options of a so-called 1-2 setup, which would be rather bullish. But until price proves that by breaking above 30.5 cents, it is literally only, and that's very objective, a 3-wave top. Okay, so what we see on the ADA chart is a possible continuation to the downside, which I would see as pretty likely. Let's say Bitcoin, Ethereum are doing a first deeper pullback in their move to the upside that they started on the 15th of June. So we can actually take a look at that. If Bitcoin does this pullback in a wave 2, and that could go, let's say it comes up, let's say a 10% pullback. I mean, you can only imagine that ADA would then most likely also head below the 10th of June low, given that the altcoins are currently selling off stronger than Bitcoin, for example. But we'll see. You can't really do that correlation logic all the time. The idea is definitely, from what we can see right now, that we only had a 3-wave move to the upside into the June highs. Since then, yes, not really an impulsive move down, but you can get away counting it like that. But certainly it could be part of this wave 5 as an ending diagonal, for example, a wave 1 in 3 waves, a wave 2, a wave 3, a wave 4, a wave 5. That's how the white wave count would work out essentially. With high likelihood. However, as long as we're holding 23.8 cents, the yellow count at least has a chance, but it needs to prove itself. So if we just zoom in a little bit, explained that to you before. Oops, didn't want to do the replay. 1 second. No. Yes. So bulls and bears fighting here. ADA did give us a possible 5-wave move up in this leading diagonal, but it's just not a very clear 5-wave move. I mean, in the end, you can interpret everything into a bullish scenario if you want to, but it is very much a forced wave count. So I do not primarily focus on the yellow wave count. However, it is still a count that revealed a trend reversal area that we used, put on the chart, and that worked out. Okay. Sometimes you get, even in the alternative wave counts, you get tradable areas where you would see an initial reaction. Now, you could argue this is certainly a trade that would have worked out. However, it can break down at any time because it has failed to follow through in an impulse. Sometimes, tactically, what can be done, for example, is to scale into this support area, for example. Then you take a look at, okay, is the trade actually working? It works, you make profit, but it fails to rally impulsively. That allows you to either adjust your stop loss into profit, or you just start to exit the trade because it just takes too long. You don't need to sit this stuff out. You can say, okay, it didn't go up as rapidly as I wanted. I'm in profit. I just exit the trade, look for the next opportunity. Just some ideas here. Just some food for thought. But again, because this would only be a leading diagonal in a wave 1, it would need to prove itself. So we have a possible 1, a possible 2. Does this look like 3rd wave behavior? Not really. Very choppy, very corrective, unless I have a 1-2. Sorry, we discussed that yesterday. Unless I have a 1-2, 1-2, another 1-2 setup. Honestly, that's very forced, and it would go higher. Again, I don't really believe in it. So what makes more sense from looking at the subwave structures is that this was a wave 1, this is a wave 2, and we're doing this because the move up is so choppy, so corrective, and we're still hovering below the ascending wedge. Now, if price manages a sustained breakout above 30.5 cents and it starts to look impulsive, then I'm gonna focus more on the yellow wave count. Until then, I'm tracking it as a potential to understand what are the invalidation levels and everything. And the invalidation point for the yellow count is 23.8 cents. Well, okay, it's not really the invalidation point, but it's the level where definitely, if broken, the white wave count is in control. And looking at the microstructure, I mean, to keep this 1-2 alive here, we need to hold 26.7 cents. So a break below that level would already be a first warning. But this wave 2 could easily stretch out a bit further. Yeah, there is no guarantee that this wave 2 was over here. So that's why I say 23.8 cents, because it can easily be reset. What is possible, for example, is to say that this was just the A wave of the wave 2. This is the B wave and the C wave. And because there are many options in corrective structures, and we need to keep that option open because the move up is corrective, it's best to focus just on the parameters, like here 23.8 cents. Yeah, as long as this level is holding, it can be a wave 2 and it can come down again. It can also rally directly. But this was the time, you know, where reward was high and risk was low. And now, yeah, I think it has a good chance to come back into this area, if not break it actually, because the move up is just not impulsive. So there is not much more to say at this stage. I think all the levels and parameters are well known. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.